Welcome to the Money Watch Show. It is Saturday, July 26th, and we are here holding your hand through whatever's going on in your financial life. We is me, Jill Schlesinger. I'm a certified financial planner. I'm also the host of this show, and I also work at CBS News as a business analyst. And I'm joined by my co-host, Mark Talercio. Mark, I want you to know, Mark came to have a visit with me over the weekend. I went out to dinner the night after, and I said, what did you do? And then our nephew said, what did you do this weekend? I said, oh, well, my producer came in. So my nephew, Justin, says, oh, Mark?
That's right. I like that.
I said, yes, Mark, he's the man. See, you're famous in my family. Oh, Mark. My sister calls you producer Mark.
Producer Mark, yes.
Yeah. Or tennis fan Mark. That's her other thing. The only other tennis fan. How are you, sir?
I'm well. I'm blowing out some candles today.
Today is Mark's birthday.
Yes.
Not that we're not recording on his birthday, but today is his birthday.
That's right.
So are you feeling older? How are you feeling?
I was in my early 30s when we started, tack on 15 years, and I am 47 today. Can you believe it?
You seem older to me. You're a very old soul. Yeah, because you're an old soul. You really are.
Look old? What?
No, you don't. You don't. In fact, Jackie said when you came in, she's like, Mark looks exactly the same, a little salt and pepper, but like you look the same, you feel the same, but you've always felt like an old soul to me.
That is true. I've always gravitated toward the older crowd for sure.
Yeah, and you also are. You're a more cautious person just in general. You're not like one of these, you weren't a 30-something-year-old who was like doing crazy stuff. Like you had fun, but you were never the kind of person who felt out of control. You always felt like there was a little, like an adult in the room, that kind of feeling. So, and I'm very delighted that we can celebrate your birthday together. Mark, what's the best part of my week every single week, would you say?
Usually Monday and Tuesday, which is typically when we record our conversation with all of our listeners.
That's exactly right. And you know what? I love having conversations like this with you guys. So you know what I did? I'm so sneaky. What I did was I pitched the idea of doing a question and answer format on television. I've stolen this. I've stolen the success of this show, Mark, and I've applied it to television. It's not quite as good, is it? Because, I like hearing the voices of the people. When we answer questions on the air on television, there have been some very funny things that come up. Like what we do is we also allow the staff to ask questions anonymously. And sometimes we get to them, sometimes we don't. But it's very funny to hear. I can almost tell you who the staff is. Who's asking me a certain kind of question. Let's say your income is changeable, meaning that you work in an industry that's consolidating. Oh, okay. That's someone from the staff. I get it. So what we're going to do today is we are going to play the segment, the Ask Jill segment that aired on CBS Mornings last week, I think it was a week ago or so ago. And so we're going to air that. So you get a little question and answer format. Then I want to come back, Mark, and then tell you about some of the questions we didn't get to that I think are really good questions. So some of them are from staff, some of them are from others. So let's get to that. So Mark, let's air this segment. This is with Tony DeCopel and Adriana Diaz on CBS Mornings.
All right.
I'm excited.
What's first?
I don't know.
I got running
All right, here we go.
papers here.
Carrie from Santa Fe writes, my wife and I are 33 years old and recently found out that she is pregnant. Is it okay to buy life insurance through my work?
Absolutely okay. The thing you want to make sure about is that you can take that insurance with you if you leave that place of work. So that's called portability. You can take it from your employer and grab it with you. You keep paying for it. Now, if you're young and you're healthy, you may want to get your own term life insurance somewhere online. It's very cheap. Again, if you're in your 30s and you want to get coverage, it's very easy to do. And that might be another solution just so you don't have to worry about, if I leave my job and how much it's going to cost.
And it's called term because it's good for a certain term of time.
That's exactly right. I would say 95% of the time, term coverage is absolutely adequate. You need it for a period of time until your kids get older, until you've accumulated enough wealth and paid down your debt. That's why term life insurance is really considered the most affordable.
All right, we got a next question from Mandy here from Connecticut. She just bought her first home and says she's spending a lot of money doing cosmetic things like landscaping and painting. And so she asks, how much do I need to set aside for ongoing maintenance?
Okay, anyone who knows that, like when you own a home, there's these unexpected things that come up. And so the rule of thumb has always been keep 1 to 3% of the purchase price set aside just because you don't know. Now, if you've got a brand new house, maybe it's 1%. But if you bought one of these old historic houses, you're going to find things need fixing. It could be a boiler. It could be a roof. And so we want people to be in the habit, if they are homeowners, to keep a little bit of extra money in that emergency reserve fund just in case something bad happens. And again, it may not be every year. You will be happy you didn't have to throw out that credit card if something bad were to happen in the home.
This is a great question from Morgan from Seattle, who has a mortgage at 6% and wants to know whether they should invest extra money or use it to pay down that mortgage at 6%.
You know, anyone who has gotten a mortgage in the last, say, 2 years has not really been able to have that normal thing like, don't pay the mortgage down, invest it, it'll be better for you. But when we're talking about 6-7% mortgages, it's a little bit scary to think about having that for a long period of time. Now, normally, the reason why I don't love paying down a mortgage is you lose access to that money. So that if you had that boiler explode or something happen, but I can get on
because
board.
you're spending extra money you may have saved for the boiler fix?
And so one of the things we call that liquidity, access to having your money. So it's a great idea to pay down a mortgage that's at 6 or 7, even 8%. But don't forget, you actually need to make sure you've got that emergency reserve fund. So don't dip into your safety net to pay down the mortgage. You want to throw a little bit of money down? I can get behind it. I want people to be clear that they still have to do the most important money moves, which is number one, that emergency reserve fund, 6 to 12 months of your living expenses. Pay down that high interest debt like credit card debt or even a auto loan that's expensive. And of course, maximizing your retirement account. If you got that covered, then I'm okay. Pay a little extra towards the mortgage.
I love that. Okay, Delilah from Florida writes, when the time comes and my daughter inherits my assets, like my house, how does she avoid probate? She is my only child. Does she need a trust?
Okay, so probate is a legal process that basically says to the state of where you live, hey, here is my will, here's my stuff, here's the person who's going to manage it. In this case, Delilah's daughter. Now, why would you need a trust? Well, a lot of people like a trust because then assets that are in a trust don't go through the probate process. And you know what else doesn't go through a probate process? Life insurance or a retirement plan, anything that names a beneficiary. But of course, creating a trust costs money. So in many cases, I will just say, look, don't worry about the probate process. Make sure you've got your will. Make sure you've got your power of attorney. Make sure you've got your healthcare proxy. Make sure that any account that you can assign a beneficiary, you do that. But if it's just a house and your physical stuff and that's the only thing that goes through probate, it's okay. It should not be too onerous. Okay, so Mark, it was very interesting because we started the question and answer with a question about life insurance, and I actually got a question about homeowners insurance and auto insurance because someone said to me at a mid-year update that I had done, I said, oh, you should review your insurance premiums and blah, blah, blah. And the question is essentially, I looked at my insurance bills, but it seems like auto insurance is high everywhere. How can I lower these bills? There are a few things. Sometimes if you're lucky enough to have if you have a homeowner's policy and an auto insurance policy, you should absolutely think about bundling those because that can get you a little bit of a break. I'm not saying this is huge. Someone else has reminded me that there are ways to qualify for discounts sometimes. Like, do you have a security system? Maybe if you could pay a full year versus a monthly amount, sometimes you get a tiny bit of a break on that. Defensive driving classes will give you a little bit of a break.
I have a low mileage discount.
Oh, okay. That's good. And then also you and I both have old cars. Sometimes you could drop your collision or your comprehensive coverage on an older car. So I went into the Insurance Information Institute, and here's the quote that I found. I thought this was good. If your car is worth less than 10 times your premium, then maybe don't purchase that coverage. So you can look up the value of your car at Kelley Blue Book, but the thing that's important is to see if there are ways to save. That's really the issue. We don't want you to think that there's you're just screwed. Sometimes you are a little bit. Okay, Mark, here's a nice fun one for you. This is from one. I know exactly who this is. When you get married, does your partner's credit score impact yours? Why do I know this? Because someone had asked me this question when they were about to get married, and they say, oh my God, his credit score is horrible. I don't want to get married. And I'm like, wait a minute. So, Mark, what do you think about that question? When you get married, does your partner's credit score impact yours?
Well, I mean, you come into the relationship with your own credit reports. I mean,
right.
Up until that point, everything's separate. But going forward, if you guys co-sign on a loan to get, like, say, a mortgage, you take out a mortgage together. Yeah, well, then you're on the hook for that loan together.
Right. But, listen, there's also sort of a double-edged sword about that, because the person with the lower score can actually see his or her score rise if you're making your timely payments and everything is good. Gang, just remember, your credit scores, they're based on 5 categories, okay? This is according to FICO, the Fair Isaac Corporation. Your payment history, that accounts for 35% of your credit score. So that means, like, pay your bills on time. The amounts owed, your total amount of outstanding debt that is factored in. The length of your credit history. Oh, by the way, the amounts owed is 30%. So really, payment history and amounts owed is 2/3 of your credit score. The length of your credit history is 15%. New credit, meaning be careful about opening new cards. I know every time you check out at Athleta, they're like, can we give you a credit card? I said, no. What do I want that for? It's going to mess with my credit score. And the mix of credit. Mark, closing a credit card account is something that seems so desirable for people. Why is that a bad idea?
Yeah, I mean, I think people think, I'm not using this. Let's just get rid of it. How can closing a credit card possibly ding me? But it does, because I think the big thing is you're reducing your overall amount of available credit, and that makes up part of the score.
And so that is the issue, right? That people are seeing that, like, oh, my credit score actually went down when I closed a credit card. Yeah, that's why it's part of the equation. Okay, here's a question from somebody who just recently asked us, and I wanted to get this on the air, but I didn't. I just want to give you a little bit of the background. There was a new court ruling that was actually struck down a law that was about to go into effect, a rule rather. So under the Biden administration, the Consumer Financial Protection Bureau said there's a rule that they wanted to remove medical debt from credit reports. So we're talking about credit reports. So I want to just tell you, okay, the rule never went into effect. Recently, a federal judge blocked the rule. And that means that about 15 million consumers who are carrying $49 billion in medical debt, they are going to see their credit scores stay pretty low. And it also means that for those people who are sort of counting on having that amount of money scrubbed, or that back debt scrubbed from their credit report, not going to happen. So someone asked a question of me, again from the staff, what options are available for a consumer with medical debt? Is there any way that I can get this, can I get this off my credit report? Well, obviously you can, obviously pay down the debt. Some states actually provide some protections around this. So you should check with your state. If you're carrying medical debt, some of these states will, I think New York is one of them, and California may be another, that they say you cannot have medical debt carried on your credit report. So you have to go back and fix that. The 3 credit reporting companies, Experian, Equifax, and TransUnion, they have already announced they have removed medical debt under $500 from credit reports. So just make sure that you go to annualcreditreport.com. Make sure that anything under 500 or below is not on your credit report. Make sure it's correct, right? That's really the other issue. Just make sure that report is correct. I also had a very funny question from somebody who said to me, again, I love you all. And I am not the kind of person, as you know, I'm not this is not a show about, like, I'm going to tell you how much money to spend. But somebody did ask me, if I have a credit card debt, how do you feel about me taking a summer vacation? It's like, I don't feel anything about that. So I did look this up, though, because Bankrate came out with a study about how people are paying for summer vacations. Okay. Here's the answer to you. Okay. 56% of people say they're going to pay for their summer vacation in cash. 47% are planning on using a debit card. And some people say they are planning on using their credit card and paying in full to avoid interest. And another bunch are going to dig into their rewards or points or miles. I know this is shocking. Millennials are more willing to take on debt for their summer vacation than older generations. Gen Z also. Gang, I'm not going to tell you to spend your money, but if you got a big fat credit card bill that's outstanding and you're carrying a bunch of debt, whatever vacation you take is going to be really fun, and that debt's still going to be there when you get back. So maybe a staycation is your thing. Maybe. There's plenty of years where I haven't taken a big vacation, and it's okay. It's okay, but do take a break. Right, Mark? What's our favorite thing? Vacation.
Absolutely, which is right around the corner.
Right around the corner for us. Hey, gang. If you've got a question, hey, you might end up on network news. Who knows? It's more fun if you come with us here on this program. It's so much more fun. We so love when you come on the air with us. So if you want to become a participant on the Money Watch show, all you need to do is go to JillOnMoney.com. Click that contact us button in the upper right-hand corner. Write us a note. And if you would like to join us live, check the box. Mark will do everything else. Don't forget to sign up for the free weekly newsletter, which comes out every single Friday. Don't forget to check out all the other content that lives at JillOnMoney.com. It's all there for you. So do that. You can subscribe to us on the Odyssey app. And you can also subscribe wherever you listen to podcasts. We're fine with that. Mark Tillers is the co-host, executive producer, and the king of all things web. We drop our episodes here on Saturdays and Sundays. Please leave us a rating and review wherever you listen. We also ask that you try to do something nice for someone else today. That'll make you feel better. It's going to make that person feel better. Change your work, change your wealth, change your life. Thank you for listening. We'll talk to you tomorrow.